Brexit was the worst case outcome. It was exactly what people were most afraid of. It seemed like it would be a cataclysmic occurrence. But based on hedging, people were very hedged for it. People were afraid. They didn't expect the outcome, but they were afraid of that outcome. And so they had bought a lot of puts, a lot of out of the money puts to protect themselves during that time, to a point where that event vol was incredibly high relative to everything around it. But at the end of the day, that event passes, right? And when that event passes, regardless of the outcome, those puts, right? As long as and generally when they buy them in mass, they further and further out of money puts become really expensive. So there's a very high bar for what needs to happen in order for those puts to be in the money. And if those puts don't become in the money because they're so expensive, and there's, if they don't become in the money, at the end of the day, the dealers have a bunch of stock to buy back because they're short stock, and they're also long a bunch of puts behind because the amount of margin between these one-day puts and the puts behind it are very high. So when these things start to happen, and the odds of the size of the drop that would need to happen to make these result doesn't come to pass, regardless of what the actual outcome was, there is a massive tidal wave of buying of options, buying of the delta, selling of options, which then leads to more Vana compression, to more buying of delta.